Condo apartments in Calgary are continuing to grow, and there is no sight of slowing down anytime soon. If you look at this graph over the last 13 months, you can see that the price has steadily increased month over month for the last 1 year. If we look at graphs from the year before, you can see that we did see some growth. We saw a little bit of a slowdown, but we're continuing to grow more and more and more. Affordable product in Calgary is definitely very hard to come by these days with this high interest rate environment and a lot of these highly competitive market offer situations. It does make it very intense. My name is Fyfe, your Calgary Realtor. If you're looking at getting into the market, I say this every single month. It is so important that you create a game plan. I very much appreciate all of the people that reach out to me asking questions, and I love that. Go ahead, set up a call. I'm very easy to talk to, and I promise I'm very data driven, and I want to make sure that you're making the right decision now. There are a couple examples that I'm going to show you in future slides which really blow my mind, but I think it's very important for people to realize if they plan on stepping into the market in 2024. So, apartment prices in Calgary have reached $329,600, up 17.2% from last year. Last year, we also saw double-digit price growth, so it's been pretty wild to say the least. It looks like month over month, we were up $5,600, and year over year, we're up $48,000. So apartments in Calgary, I wouldn't be a bit surprised if we see that number inch up to the $400,000 price point by the end of the year. So let's check it out. Now, it is important to remember there are attributes with this. So for $329,000 as an average, you're getting a 2-bed, 2 full bath. You're getting about a 905 square foot unit. It is a underground parking stall as well as built in 2005. So when you see the benchmark prices, make sure that you overlay the attributes with them. So let's see what the Calgary Real Estate Board has written about this. Sales in February reached 638 units, contributing to a year-to-date sales increase of 39%. Relative affordability has supported the strong demand for apartment-style homes, and sales growth has been possible thanks to the continued growth in new listings. Inventory levels trend up over the last month in line with seasonal expectations. However, inventory levels declined by 12% compared to last year, ensuring the market continued to favor the seller. With just over 1 month of supply, persistently tight conditions continue to place upward pressure on home prices. Prices have steadily increased since January of last year, and as of February, they reached $329,000, a 17% gain. Basically, it just talks about all of the places that have seen increases, but we'll touch on that in a moment. So what I would like to touch on is just how tight this market is, and we're going to show you some slides here with the inventory levels here in Calgary. If you're getting into the market, it is very important to realize how many offers are going in on specific properties. Now, this is a really good recap, just as an overview of what's going on. So this is the last 30 days of sales, and we're only looking at 33 of them. So 274 sales sold under ask price. So today, March 5th, we saw a lot of things sell under ask price, which is great. That does mean that there is a lot of room for people to negotiate still. 82 of those homes sold at ask price out of the last 30 days of sales. You can see that if you look at the days on market here, they are selling relatively quickly. In this column here, over the last 30 or 33 sales, there looks like there was a potential of 3 unconditional offers, which is not bad. And then 217 sales sold over list price. So 274 under, 82 at, and 217 above. So it's not quite as many as as under, but it is still very important to realize that there's a lot of things selling over ask price. If you look at the days on market, and again, this is categorized by close date, so we're going to March 5th, you can see just how fast these things are moving. And I want to bring up line 2. This literally sold today, and I actually had a personal interest in this property with a client. I actually placed an offer on this property, and we were absolutely floored with how much it sold over list price, unconditional. You can see that it was listed for $300,000. It was a 1,100 square foot unit in Country Hills, and it sold for $377,000, $70,000 over ask price. I was absolutely blown away when I saw just how much it sold for. It's very, very hard to advise a client to go over $77,000 of the list price. If we drop down to line, let's say 13 and 14 here, a little bit more of a realistic, you can see it listed for $349,000, yet it's still sold for $20,000 over at $326,000. Line 14, it was $320,000 and it sold for $326,000. So there is still obviously some realistic over list price offers here, but it's so important that you look at the market, you get data-driven analytics, and you start to make a game plan around what is going on. You can see that there's probably around around, I don't know, 10-ish unconditional offers in here. I don't like unconditional offers. I say that every time. If people are comfortable placing them, by all means, but on a condo, you really want to make sure that you know what the condo building is doing and you have a very good confidence in the corporation itself. You want to get those documents reviewed if possible. So going back to this chart here, you can see a steady growth from February of last year. You can see that the sales to inventory is very, very tight. It's actually one of the tightest that we've seen going all the way back to August 2023. So we're starting to see an increase in sales, a slight increase in inventory from the new year, but it's just not enough to offset the amount of demand for this market. So by looking at this chart, you can make a guess that by the end of the year, we're going to inch up to that $400,000 price point. Will we hit it? I'm not sure. I don't think we will, but we are going to inch up there pretty quick. Now, this data is the same data, just in a numerical value. You can see a lot more detailed information about the individuals. So just for February, we had 638 sales, 836 new listings. We had a leftover of 773, which is good, but not great. I mean, when you look at the inventory, anywhere from March to, let's just say, September of last year, it was all over 1,000. So at least there was a little bit to choose from, a little bit more. The days on market dropped down to 26, which is the hottest that we've seen on record. January, on this record here, January 2023, it was 44 days on market. Now it's 26, meaning that the average property is selling within 26 days. That is condo document review, all of the conditions put into that. 26 days is the average days on market, which is pretty wild. The benchmark price is up to 329. The median price and the average price are up a little bit. It's interesting to see the average price actually drop from last month. It was 337 and dropped down to 332, yet the attributes actually increased. So more cheaper product sold for a little bit more expensive, upticking that benchmark price, over more expensive product actually bringing up that benchmark price. So if you have questions about that, please feel free to reach out and ask. I have no problem explaining that. So this one's interesting. I'm going to touch on this every month now. I actually quite like this. So this is the apartment sales volume and all this stuff. Last year we were at 228 million. This year we're at 376 million already for the year to date. You can see we're up 65%. You can see that the new listings is up to 1,400, which is great to see. Not enough, but it's great to see. Inventory fell. You can see months of supply fell pretty dramatically from over 2 months to just 1.29, which is very intense. Sales to the listing ratio kicked up quite a bit to 76%, so a lot of units are selling. Sales to price ratio is at 99.62. I wouldn't be surprised if we see this inch over 100% like we did in the detached market, meaning that the average listing is selling over ask price. I would imagine we're inching to that territory. Days on market for the year to date is 30, and then the benchmark, the median, and the average price, which we'll touch on a little bit later. So this is a pretty good graph. I'm not going to touch on this very long. This is basically a chart to show where we're at with inventory. You can see the months of supply is way down. The trend is obviously dropping, very much indicating that we're going to see some sort of price increase in this market. I would imagine, like I've mentioned in some videos, 2025, 2026, we might see an uptick in inventory, but when more new construction comes on the market and more new projects come onto the market, as well as all of these renewals for higher interest rates come about, I would imagine and hope that we see an increase in the trending line. Now, months of supply, this is quite interesting. This just kind of gives us a quick showcase of where each individual quadrant's at. You can see that City Center and Northwest are the quote-unquote slowest markets. City Center is at 1.5 and Northwest is around, let's just say 1.4. Still very much a strong seller's market, but a little bit slower and maybe a little bit more inventory in those two quadrants compared to others. When you look at Southeast, South, you look at North and East, and as well as obviously Northeast, they're all under 1 month of supply, meaning it's a very aggressive seller's market and things are moving very quickly. Now, the benchmark price. This is interesting. It just kind of showcases what the benchmark price is for the entire city. Everything's hovering around that $300,000. You can see East Calgary is a little bit cheaper. You can see it's all the way down to 200, where everything else is in the same realm. Now, it's very important that we put the attributes into play, and this is actually kind of cool. So when we look at the Northwest and we look at the West as our two examples for today for the benchmark attributes, West was more expensive than Northwest, obviously. But when you start to look at these attributes, it paints a cool picture. So you got a two bed, two full bath in both quadrants. You have a 910 square foot property versus the 974. Northwest was built in 2001, where West was built in 2023. Now, when we go back to this chart here, you can see that we're very close in price. Northwest is roughly around $300,000 and West is roughly around $310,000 to $20,000. If you were to take the attributes from Northwest and you actually put them to West Calgary, where you increased the square footage and you increased the year built, I would imagine the actual price in West versus Northwest is spot on the exact same. So just because we look at these attributes, you want to make sure that you're actually looking at live data to kind of confirm your thoughts. If you are looking at one quadrant over the other, then it's obviously important to look at communities and what you're actually getting in those communities, and then looking at the recently sold data points from those buildings, more or less than anything. It's very important to realize that if you're looking at old data from like a month ago, even 2 months ago, pricing has increased. I've seen clients get stuck in this rut where they look at data from a month ago and they think that that's the price that they're going to get for apartments. Not really. We're seeing, $5,000 per month increases in Calgary. So if you're looking at properties sold in, September to December, January to February, we've seen pretty large increases. So you need to overlap that into your expectations of what you're going to buy an apartment for. So this chart here is just year-over-year price growth. We can clearly see the two most affordable quadrants in the entire city, Northwest and East, saw massive increases, obviously. And really, really good for people there. If you're curious, really, really good for sellers, not really, really good for buyers. I just want to very much clarify that. And very bad for investors who are looking at getting into the market. If you are an investor watching this video, I'm sorry, you've missed the mark. I'm going to start calling this out a little bit more aggressive on my videos. I have a lot of investors reaching out to me asking questions, and they just don't work. I've ran a lot of numbers with a lot of different people. There are opportunities out there, but they're very hard to win, okay? If you are a homeowner, and you're looking at what the market has done for your personal asset or your income property, go ahead and put it into this AI software. It is very slick, it is very smooth. It will spit out an instant home valuation to you. It's fairly accurate in my opinion. It does look at all of the recent sales in your building, and within seconds you'll get an updated price, and it's just for your own benefit, right? If you're looking to leverage that asset, if you're looking to refinance that asset, whatever, this is a pretty good product for you to try out. Yes, of course, I'm going to call, I'm going to say hey, I'm going to say thank you very much for using the service, but at the end of the day, I'm just here to build a relationship with you and try to provide value. So this is the microeconomic breakdown for the entire city. This is a really cool place to be if you are looking at buying, investing, or getting into this market, because each individual quadrant has its own story. So you've got the sales, you've got the new listings, you've got the sales to new listings ratio. You can see that everything is hovering around 85 to 90%. Nothing is seen over 100%, which is really good. You can see the inventories here, the leftover homes at the end of the month. You can see City Center, which is a very large quadrant, has 439 homes left over at the end of the month. There's a lot of product to choose from. Or you go all the way down to East Calgary, there's 15, okay? Very, very different markets, right? You've got your months of supply where everything is hovering around 1.5 months. You can see there is a few actually under 1 month of supply. You got your Northeast, your North, your South, Southeast, and East. Even the ones that are just above 1 month of supply, like Northwest and West, they're still very active. They're still very busy. This is the price per quadrant. Very interesting to see there. Your year-over-year growth, your month-over-month growth. Every single quadrant has seen some sort of growth. We will reveal this now, and you'll see that every single quadrant saw pretty sizable increases, including Calgary Southeast, which saw a $10,000 increase in 30 days. There's a lot of activity going on in this entire city, and for the second month in a row, Southeast has kind of led the charge with the fastest increase in price. You can see the month before they increased by 57, and this month they increased by another 10. So if you're currently looking in the Southeast, it's super important that you realize just how intense the market is increasing in that area. Everything else is hovering around that $5,000 month increase, which is still pretty wild for 1 month worth of data. So where's the market going? This chart here is a very good indicator of what has happened over the last 5 years. You can see in 2019, we saw a decrease. 2020, we flattened. 2021's very small increases. 2022 took off with a little bit of a slowdown in the second half of the year because of interest rate increases. 2023 absolutely exploded in Calgary. We saw massive increases. 2024, I would imagine, is going to be somewhat similar to 2023. I could be very wrong. Don't take my word for it. Let's look at the data, but from what I've seen in this market, I would imagine we're going to see pricing increase fairly rapid. So strap in and make sure that you have a game plan in place. Sellers, obviously you're in a very good position right now. You can leverage that and go on the market, sell it relatively fast. Buyers, you want to make sure that you're getting a very clear understanding of what you're getting into, how much pricing is going to cost in certain areas, because it is not getting any cheaper. And investors, unfortunately, you've missed the mark. Yes, there is opportunities. Yes, there's opportunities out there for you. The 20% down investors, they don't typically work. Trust me, I've ran a lot of numbers. The 30 to 40% investors, they still work, but who wants to invest 30 to 40% of their own cash into a condo in Calgary? Not many people, and I totally get it. So make sure that you have a very clear understanding of what you're getting into before you get into it. My name's Adam Fyfe. If you have any questions, comment below. Thank you very much for watching. We'll see you on the next one. Peace.